What is a share-for-share exchange? A share-for-share exchange is where one or more shareholders exchange shares they own in one company for shares in another company. So I hope that makes sense. Effectively, a share-for-share exchange, you're exchanging shares you own in one company for shares in another company. A common example of this would be whereby shares that are owned in a trading company are exchanged for shares to be owned in a holding company. Okay, so this is where we start talking about the insertion of a holding company. Now, I will talk about the benefits of a holding company very shortly, but let's stick on this topic, which is what is a share-for-share exchange. So effectively, for your understanding, let's just say you own shares, or your client owns shares in a trading company. Now, if we are to insert a holding company on top, there are share-for-share exchange provisions, or a particular relief that's available in legislation in the Taxation of Chargeable Gains Act 1992, so TCJA 1992. Yes, a bit technical because this video is aimed at business owners as well as the advisors, so accountants and lawyers. Effectively, you're looking at around section 135 to 139 TCJA 1992. Now, by default, so let's ignore the provisions for a second. By default, if you own shares in a trading company, by default, the insertion of a holding company on top, what's actually happening? That's what I'm trying to explain. What's actually happening? Effectively, what's happening is you are selling your shares that you own in the trading company to the holding company, right? Because the holding company then owns the shares in the trading company, and you'll own shares in the holding company. So technically, there's been a disposal. And that's where the provisions come in, whereby as long as there is a mirror image in shareholdings, then no capital gains tax is payable. If there's not a mirror image, then a percentage of capital gains tax may be payable. There are, certain conditions that need to be looked at, and HMRC clearance is strongly recommended. Now, this is a structure or a restructure that we regularly get involved in. Just in the last week, we've received clearance from HMRC on 5 different cases. Some of them are not direct 100% share-for-share exchanges. Some of them are, 26%, 40%. It's just very, it's tailor-made and bespoke to client circumstances. In terms of why you'd want to go through this share-for-share exchange, and it is applicable in other scenarios as well. But one reason or a couple of reasons why you'd want to insert a holding company. Number one would be around reducing the commercial risk. So effectively, if you have valuable assets that are owned in the trade, for example, trading property, IP, excess amounts of cash, then those assets are subject to litigation. If anything were to go wrong, those assets are subject to litigation. You transfer into the other legal entity, which is the holding company, which you still own, but it's a separate legal entity, right, for legal purposes, and therefore the assets are protected. Another benefit would be tax-free dividends. So rather than taking dividends in your personal capacity, the company can extract dividends, and again, tax-free. So there's no corporation tax on dividends. They are completely exempt. Number 3 would be something around the substantial shareholding exemption, whereby the sale of shares in a trading company subject to conditions being met. A lot of tax is about conditions being met, and that's where we come in and provide the full value, and more importantly, we provide the confidence that certain transactions you won't be paying any tax on, or you'll be paying X amount. So substantial shareholding exemption, no capital gains tax, no corporation tax on the sale of shares in a trading company. That's a massive one. And number 4, let's say, would be group relief. So for capital gains tax, assets can be transferred for no capital gains tax between group companies, and also stamp duty land tax when we're looking at properties. Properties can be transferred intercompany without any stamp duty land tax. I hope that was beneficial. I hope that was useful. Feel free to reach out. We are expert chartered tax advisors, and we pride ourselves on our technical knowledge and capabilities, but also our swift communication. That's something that I always push myself and my colleagues to ensure that things get done very quickly. So do reach out, omo@aswatax.co.uk, and check out, most importantly, check out our Google reviews, 5-star reviews. Clients are all happy. Do reach out. Thank you.